All right, you need to refinance, or do you? I don't know. In today's video, we're going to talk about when you should consider refinancing and if this is the right time or not. All right, so today's video is going to be a little weird for me because I'm holding this little microphone here and I talk with my hands a lot. So I'm hoping this isn't too distracting for me or for anyone else, but truth be told, it's probably better for you because you don't have to see this coming in and out the whole time. Refinancing is a hot topic, especially in the current environment. There's been so many advertisements or marketing ploys around it, right? Marry the home, date the rate, buy now, refinance later. And, the truth is that refinancing is a great option. You're going to reposition your finances to pay less interest. It's going to cost you less when you own that home. So I think that it's important to look at when you should refinance, not if you should, but when you should refinance. And I guess it is a matter of if, right? Because if the timing's not right, then there's never going to be an if. So I wanted to talk about some of the different details when you're looking at refinancing your home. So out of the gate, when I talk with clients, a lot of times we'll look at, okay, well, I don't want to start over on my loan. And you know what? I don't blame you, especially if you plan on paying this loan off over the next 30 years. Then if you're in a position where you're concerned about that, keep in mind that when you refinance, you can refinance for odd years, meaning if you're 2 years in, you can look at a 28-year loan. If you're, 5 years in, you can do a 25-year loan and so on. You also may want to consider using an even shorter term. If your rate's dropping a certain amount and you're shortening the term, your payment may stay the same while you're cutting those years off, which can have a big benefit as well. That shorter amortization schedule means more money is going towards your balance on your loan and less towards your interest that's due. So when you're considering refinancing, don't necessarily push back just because you don't want to start the clock over. You don't have to do that. Now, in some cases, that may not be a concern. Maybe your loan is less than a year old and you're in a position where you're just looking to lower that interest rate. So that's not going to be as much of a factor. One thing you definitely want to consider, though, is what's the cost benefit? So when you're refinancing, there are closing costs, regardless of what anyone tells you. We can tell you there's absolutely no costs with the loan. Now, the way that works, the costs exist. It's not like they just magically go away. But instead, what happens is lenders will issue a lender credit, right? So if you had $2,800 in closing costs to refinance your home, then the lender could say there's no cost because at closing, they're going to issue a $2,800 lender credit, in which case then you would not actually feel those fees or feel those costs, and they would not be added to your loan amount. They're not going to be, anywhere else. Now, are they hidden? Not necessarily, depending on who you're working with and how they tell you. So one thing to consider, if you're going through and you're receiving a lender credit, there's a chance that you might be able to get a better interest rate if you paid those costs. So you want to have a good understanding on what's more beneficial for you in your situation. What are you getting for your money? How far of a rate difference is it? If you were to pay the closing costs, how much lower of a rate can you get? In some environments, it may only be an eighth of a percent. You may refinance to 6.375 if you pay the cost versus 6.5%. And you want to, well, I mean, you basically want to hedge your bet on that. If you can take no cost at 6.5 and then rates drop to 6%, well, you could refinance again without really having any risk because you didn't pay all those costs. Whereas if you refinance to 6.375 in that scenario, you pay $2,800 in costs, and then 6 months later you want to refinance again. Well, those costs start to add up, which basically means you start to limit the benefit of the refinance. So just find out what that cost benefit is. Where's the rates at? If you pay the costs, don't trust anyone when they tell you there's just absolutely no costs. I mean, let's face it, nothing for free. Just the way that it goes. But you can still find out what's going to be the best financial situation for you. Another thing to consider, if it's been over 6 months, if you bought your home and it's been over 6 months since you purchased your home, look to see if there's an advantage to getting a new appraisal. Because when you're refinancing, you may not need an appraisal. Lenders can do what's called a recertification of value. So this means that the appraiser basically just says the home's still worth what you paid for it, right? Or what it was appraised for in the first place. And that can be a cheaper way to go about this for you or for the lender, depending on who's paying those costs. However, if you're outside of 6 months, there could be a benefit. We've seen rapid appreciation in a lot of markets. So if you're in a place where your market has been going up and your home value, maybe you got a good deal, or the value is going to appraise it higher, well, that could have other benefits. It could mean a better interest rate because you have more equity in your home. It could also mean maybe you're removing private mortgage insurance. If you put down less than 20% and you have PMI, well, this could be a benefit. This might be your opportunity to remove that PMI, which would be obviously beneficial in lowering your payment even more. So make sure you're talking to your lender about those options and looking at that. Another thing I like to point out, it's a little bit of I don't think it's a secret. I just think it's what a lot of lenders don't realize. I didn't realize this myself until recently. There's been some weird things going on. Like seriously, I mean, lending's weird. That's it. The real estate industry is weird. This last year, this is the end of 2023 recording this, and this last year has been just some of the strangest I've seen in 22 years for so many reasons. One of the things that's been very weird is that different loan amounts have a different impact, and it could be a $250,000 loan amount. You might see a big difference between a $244,000 loan amount and a $250,000 loan amount. And I know that sounds strange, but it's the reality. And some of these differences are pretty big. We're seeing interest rates where it could be a 1/4% difference on your rate. So make sure you're looking at that. If you have the option to maybe take out a slightly lower interest loan amount and try to play around with those numbers, talk to your lender about it because this could be a good opportunity for you to get even better terms. Your lender should be looking into that. But again, 22 years of doing this, over 10,000 loans closed, and it wasn't until just recently that I was even aware of this. In my defense, I don't think this type of discrepancy really existed much further past this year. So it's very strange. But when you're going through looking at refinancing, make sure you talk about, is it a better idea to get an appraisal if you need it, or if you don't need it, is it still a better idea to get that appraisal? And then play around with those loan amounts and see if there's some benefits there. I think another thing to consider then, again, going back to the beginning and talking about loan terms, if you're looking at your the remainder on your loan, see if there's a benefit. You might be able to go through and shorten that term and still not have an increase in that payment. And again, maybe that's not what you're looking for. Maybe now let's go from the other side of that. Maybe you're in a position where you want your payment to go down. Your number one goal is to lower the amount of interest that you're paying. So you want the lower interest rate, but at the same time, you also want that payment to go lower because maybe it was a little higher than you wanted in the first place. Well, unfortunately, resetting the clock, say you're 2 years in, going back to a 30-year loan stretches that loan out over 30 years, and that can lower your payment. That's not necessarily a bad thing depending on your position, but keep in mind that will cost you more interest when you lengthen that term. So just make sure you're aware of what that benefit is and what's going to work best for you. Outside of that, right now we're seeing a lot of people look to refinance that may not have a benefit. A lot of people ask me, they say, okay, well, I don't want to refinance unless I'm dropping my rate at least a point. Don't focus on the difference in the interest rate as much as you want to focus on the difference in the payment. Again, provided you're not just stretching the loan out, lowering the payment. Don't fall for that trick. Some lenders will say like, oh, well, you're only lowering your rate 1/4%, but look, your payment's going down $150. Well, it's because you're stretching the term out, not necessarily paying less interest. Matter of fact, if you do an amortization schedule and look at the interest over the life of the loan, it may not be saving you anything. So just make sure there's a benefit there. But if you were a year in and you're looking at a 29-year mortgage and your payment is dropping by $150 and you're not paying any closing costs for that, that's a good value. I mean, I think that there's a lot of people that would really like to have that $1,800 a year, and I think that's going to add up over the years. So look towards that and see what that benefit is, and look to see, exactly how much money you can save, because just because you're not lowering your interest rate by a point doesn't mean it's not a good idea. Refinancing is a great opportunity. You just need to make sure the time's right. As always, make sure you talk to a qualified mortgage professional so this way you can have an understanding if the time's right for you and what those financial benefits are and if they align with what your goals are. If you like this video, please remember to hit that like and subscribe button and check us out for some more great videos.